Well, good day all. I'm Epstein, and here we are with your SPDR ETF video, your market wrap-up, if you will. And this is for Wednesday, the 5th of July, 2023. So it's an interesting next 2 days after this. First, we got the FOMC minutes today, and if there's ever a time there was division, it was very glaring if you bother to read the minutes. This was one, let's give one for the team captain. We'll vote to give him, we'll sit still. But if you read the minutes, it's not what was really wanted to happen by a number of members. All right, that doesn't mean the Fed chair hadn't listened to it, but I'm talking unanimity. I don't think it was there at all. So when we look at it, I was watching parts of it, and the Fed staff said the important thing. You don't have to have much of a recession at all at the end. That was the important thing to me. So they're seeing what we are seeing, that number one, this idea that the labor has to weaken and doesn't weaken. What do you do with that? That probably keeps the economy altogether strong. Do they go for more interest rate hikes? Well, that's pretty clear. Here's how I read it. If the JOLTs data tomorrow, which comes out, is again a number that's, 10 million plus whatever, I would say that means that that's a positive. If the jobs report on Friday comes in, as they're saying, 225,000 or higher, that's probably the second nail in the coffin. You're going to get also tomorrow some service sector PMIs from S&P Global and ISM. And then we're going to get some CPI numbers. Now, the way that the July meeting's set up, I think July 25th is the date for the two-day meeting. So you're going to get a whole slew of reports in there, but you got to weed out the major reports to the minor. Certainly, JOLTs, big, in my opinion. Market's starting to pay a lot of attention to that and has been. Number two, what are we going to look like on the jobs report? I think that's very important. And while service sector PMI numbers are nice, they're not major right now. It's all the other part, the core CPI, that I think you want to pay very good attention to. That's where you're at on it. The other thing you want to look at this time of the year, the beginning of July, is often where both the NASDAQ and the S&P take leadership over and they run to the upside into mid-month or a little longer. But there's strong seasonality to it. I think the NASDAQ has done it 14 out of the past 15 years. And the S&P has done it 15 out of 15 years. You got to remember, if past history guaranteed future performance, I wouldn't be here, nor would anybody else that can track this. So there's plenty of risk involved in that. But it gives you an idea. The seasonality is there, and the pullbacks in this market are what the pros are looking for. And from everything I'm seeing, they want to buy a break if they're given that opportunity. Now, one of the interesting markets right now is Amazon, because we have Prime Day coming. And with Prime Day, we'll see how the sales go. What are they doing? In addition, there's a lot going on at Amazon. They're trimming costs. They're doing what the other movie studios are doing for Prime. They're starting to cut back, figure out what they have to do. So it's cost crunching time. And got to remember, we're halfway into the year. You're going to get some big sales coming up. Prime Day to me is a primer to tell me what the Christmas season's going to look like. So we'll get an idea there. In the pattern, you have a higher high and a lower low. It's not yet set up for a trend per se. It could. If you were to take out just today's high, what would happen is you'd have higher lows. You already have the higher high. That would change the pattern of the market. And then today's low would be the important number. You're not there. I'm giving you the what ifs, just explaining it. If the market doesn't do that and decides to fall, the support's back at the 18-day average of closes. That's the red number. The 100-day average in green, then the 200. The resistance is right here. If you're trying to buy the Bollinger Band for it to pop up, I call it a sucker play. 95% of the time, the market trades within the bands. That doesn't mean you can't push the band higher. But buying it over the band to get there, you generally get a better opportunity if that's what you're thinking to yourself. Learn to work with Bollinger Bands. I have a course on this that teaches it to you. It's 15 chapters. You'll master it over a weekend. It's on our website, iraepstein.com, under education. The next thing, learn to look at momentum. You're overbought. So what you have here is a market that's overbought, not in a trend. You have a higher high and lower low, and it's against the resistance point. I'll let somebody else want to own it temporarily. Come on. What great plays in Lucid. For 2 or 3 weeks, I've been doing cars. I'm through doing them now, moving on to other parts of the market. But I thought this could run. I told you I was a big fan of Rivian for I don't know how long. But the reason is I like their partners. I like Lucid for the same reason. Rivian's got Amazon. And some people are saying, well, these trucks in America, they're narrow, they're not as big. I saw one. I certainly didn't walk in it, and I didn't have a chance to talk to the driver of it. But I do want to ask those questions. I hear that the first 300 are now being delivered. I think it's in Germany now. And as those get going, if they are smaller, they'll certainly work on European roads beautifully because, in Europe, if you go to the streets, they're traditionally narrower than they are in America. We're the new country. We're only, 247 years old? I think that's where we're at now. Wow. But I do think if you look up here, when you get to the first challenge of a major moving average, what do I tell traders? Now, that's where money's going to come off the table. That's not to say you're not going to get there, go higher and play around. Money will come off the table. It's a big test number. You've just come from here, let's call it the $12 range, and now suddenly you're up to 20. I think you're fine taking some money off the table, and I am the big bull on this stock. Same with Lucid and some of the others for the long term. I like that Lucid's got Saudi Arabia, who's dying to diversify and get away from just oil. They've got $9 billion invested already, and they want to build a plant there for their Mideastern business. That's another way to look at it. So I like what I'm saying, a well-heeled partner in a car. If they can get their production problems to begin being resolved like Rivian, it could be an interesting company. And it's not a low-end car. Theirs is a high-end car, the high-end car. And there's a market for those, as we've seen. I have been in one of those, so I can tell you I love the car. Higher lows, higher highs, market's still in an uptrend. I think the pros are looking at this market hard. But the buy, if you pull back at 61.29, is problematic for the moment. The last break low was 61.33. If you buy it, you're going to end up with a higher high and lower low. It's not the pattern that I'd want, so I'll be patient on that. In XLF now, I've been telling people take money off the table here. Again, the first challenge of the 200-day average, the upper Bollinger Band, and overbought. The odds favor me. That doesn't mean I won't tell you on pullbacks to come in the market. I will. I can tell you by the look of the chart. But overbought and all that tells me, I think money off the table's the way that I would be telling my clients. In XLI, overbought, but it could embed. Now, you need at least 3 days in a row of over 80 readings to get that. You have today, you had the day before, and the day before. Yep. So with 3 days, you're embedded. So what I think now, I think that the pros will buy this market now for tomorrow. If we get a break in this market towards the 18-day average, there's another moving average I use. I'm wrong. I will tell my clients not to be buyer and come out. In fact, let's assume you just dropped in the morning, just dropped. I'll look to see in the first half hour where the red line is. And that's when the orders go in after that. I like money to deploy first. So I'm looking for the market down there. But as long as you don't close under 79, I think the market's going to be one of those markets you try to buy. Now, NVIDIA's got a little bit of a problem. Not long-term with the AI, but short-term. This whole thing with China is getting to the point where you do that, we're not going to give you this, we're not going to let you do that, you're going to hurt us. And it weighed on the market today. You got up to one of the highest moves you recently had in the past week, and you gave that all up. Problematic as I see it. I like the long side, but now the question is, do you take any money off the table? And if you get under 405.18, you can get more of a drop in the market. Don't let a profit turn into a loss if you can avoid that. In stocks, the market acts like it wants to pull back and challenge the 18-day average at the 506 cents. It's actually not even that. It's the $500 level. Let's just call it that. because when you open, you'll be at that number or under, and you don't want to get under this number. So let me just show you the problem, how narrow you're getting. I'm going to be looking tomorrow hard at the JOLTs data and see what it does, and then deciding where to deploy money. I can tell you that already. The last break low was here, 490, as you can see, 495.40. That is the number I don't want to see the market get under. If it does, I want to go back into a neutral position in the market. In the home builders, if this red line closes under 79, bye-bye. What's hurting it right now? I just mentioned, interest rates are the highest they've been since March in the 2-year and the 10-year. They're running together. The curve yield is still staying at 100, but they're actually seeing higher rates. Well, what do you do if you have a JOLTS data that is still very strong and a jobs report that comes out strong? It would be another jack up of an interest rate. You probably back off in the home builders a little bit. You'll know a lot more if you see that under 79. The odds are that you're going back to 77.42, about $1.50, $2 lower than this. In the energy sector, you're in the middle of an OPEC meeting. So far, all the news is supportive to oil prices. You've got the Saudis committing into now a month of August, in addition to July, for a 1 million barrel a day cut. We have the liars, being Russia specifically, the liar singular, saying they will get to the 500,000 barrel a day cut in August. We'll see if they're able to do that or want to do that. So you're getting parts there that are good, and you've got an FOMC report that says that in America, they have their doubts. It can go either way if you even enter a recession. None of that sounds like oil demand's going to go away in the second half. So the key is, can you get rid of enough production on the market? Now, they're going to talk about Iran, Venezuela, and others probably tomorrow, and let's see what they're talking about production as a whole. Today was more of a seminar for all the members, but very important. It sets the tone as to what's going on. In the gold market, this was a bear market rally, in my opinion. Now, why do I say that? Because the market has been under the 18-day average of closes in red. And when you get a rally towards that number, I call it a bear market, because what determines the bias of the market is the relationship of price to the 18-day average. And you tell me it hasn't been fighting at that number to stay under it. Therefore, I view the rallies as bear market rallies. In the silver gold ratio is flipped. Silver is now stronger than gold. It happened today. You got over the 18-day average of closes. So now for the silver, it rallied right into the key resistance of the green line, the 100-day average, and it did the same to the 18. It has been an oversold market. It is still an oversold market. Not certain what it's going to do right there. In the copper market, it is still basically a market that is caught like the gold. Take a look at this 18-day average. You tell me you haven't been fighting there? That's the battle. That is the exact battle of the market. The bias is down. You're void of a trend temporarily. Bonds and notes, TLT, I'm bearish. But would I ever tell a client to go short under the black Bollinger Band? Let me tell you, it will never occur. And the reason is you only stay under it 5% of the time. There will be an opportunity, may not be at a higher price, but to sell within the bands. There's a way to work within this. The big resistance is here, 72.64 to 65. The 200-day average and the 18, we came up and tested it, and now we can see it is really important resistance. I think you're going to see an inversion tomorrow where the 18 gets under the 200. And we'll see if I'm right on that. That would still be bearish. I don't know what happened to UUP. It got a bad quote just now. And FXE, something going on in those markets. So I can't give you when they go nuts with their quotes. But give you an idea as to what's going on, where we're at with it. Remember, you got less than 48 hours, I think, left on the sale. And you go to iraepstein.com research. This is for new and returning members. You can click at the top here. An icon will appear. It'll take you right to the area. Choose what you want. And again, folks, getting it half off. You can quit when you want. Give it a try. I think that I'll come up with an idea or two you might like. I'm Ira. Take care.